Welcome back to XRP Update, where we break down the biggest developments shaping the future of XRP, blockchain technology, and the global financial system. Today's discussion may completely change the way you think about XRP because for years we've heard one argument repeated over and over again. When artificial intelligence takes over financial transactions, Bitcoin will be the default choice. That narrative has been pushed across social media, podcasts, and countless crypto discussions. But what if the companies actually building the infrastructure are telling a completely different story? What if the real winners are not the loudest voices on social media, but the networks quietly preparing for enterprise adoption behind the scenes? That's exactly what we're seeing today. And the latest announcements could be one of the strongest signals yet that the next phase of digital finance is moving far beyond simple speculation. This is no longer just about buying and selling cryptocurrencies. It's about building an entire payment ecosystem where machines transact with other machines automatically, securely, and within regulatory frameworks that governments and institutions can trust. One of the biggest announcements comes from Mastercard, a company that processes billions of transactions and understands global payments better than almost anyone. Mastercard recently introduced its vision for Agent Pay, a system designed for the future where AI agents can initiate and complete transactions at machine speed. Think about that for a moment. The future economy may involve software paying software, AI purchasing computing resources, AI settling invoices, and autonomous systems conducting business without waiting for human approval every few seconds. However, Mastercard made it very clear that speed alone is not enough. The future requires trust, governance, security, and compliance. That's where the story becomes fascinating because among the dozens of partners involved in this initiative sits Ripple, a company that has spent years focusing on regulated financial infrastructure rather than chasing short-term hype. For longtime XRP supporters, this announcement feels less like a surprise and more like confirmation of what they've believed for years, that enterprise adoption would happen quietly before becoming obvious to everyone else. Ripple itself reinforced this narrative by explaining that as AI agents begin conducting transactions on behalf of businesses, payments require much more than fast settlement. They require clear rules, programmable controls, auditability, predictable costs, and infrastructure capable of enforcing compliance automatically. According to Ripple's leadership, the XRP Ledger and RLUSD are being designed so enterprises can allow AI systems to transact within strict boundaries established by the technology itself. In simple terms, an AI agent can only perform the actions it has been authorized to perform, creating an environment where automation does not sacrifice accountability. This is a completely different conversation from the early days of cryptocurrency when decentralization alone dominated headlines. Today's institutions are asking practical questions. Can regulators audit transactions? Can businesses control spending? Can compliance travel with the transaction itself? These questions are becoming increasingly important because the next generation of finance will involve trillions of dollars moving digitally across borders every single day. For years, critics argued that Ripple was spending too much time focusing on regulation, while other projects moved faster with speculation and marketing. Yet Ripple consistently hired compliance experts, legal specialists, and financial professionals while building relationships with banks, payment providers, and regulators across multiple jurisdictions. Many investors became frustrated because this strategy appeared slower than the rapid growth seen elsewhere in crypto. But today's developments suggest there may have been a long-term plan all along. Large institutions cannot simply adopt technology that ignores regulations or lacks proper controls. They operate within strict legal frameworks, and any payment infrastructure they adopt must satisfy those requirements. This is why compliance has become one of the most valuable competitive advantages, rather than an obstacle. The market may reward speculation temporarily, but institutions reward reliability, governance, and trust. Perhaps the most remarkable aspect of this evolution is that the average consumer may never even realize blockchain is being used. Think about how the internet works today. Billions of people stream videos, send emails, and shop online without understanding the protocols operating behind the scenes. The technology simply works. Ripple supporters have long argued that XRP could follow a similar path, where users interact with financial applications while the XRP Ledger quietly facilitates settlement underneath. In the coming AI-driven economy, autonomous agents could move value instantly between businesses, service providers, and computing networks without consumers ever seeing the infrastructure making those transactions possible. If that vision becomes reality, then the true value of blockchain may lie not in public attention, but in invisible utility. And that's exactly why today's announcement deserves attention. It suggests that some of the world's largest payment companies are preparing for a future where AI and blockchain work together to power the next generation of global commerce. The conversation becomes even more interesting when we compare where the crypto industry was just a few years ago to where it is today. Back then, whenever people discussed partnerships between major financial companies and blockchain firms, the response was almost always the same. It's only a pilot program, or they're experimenting, but they'll never actually use this technology. Those arguments were repeated over and over again. Many investors dismissed every announcement because they believed traditional finance would never integrate blockchain into its existing infrastructure. Fast forward to today, and the language has changed dramatically. Instead of talking only about experiments, companies are now discussing deployment, production environments, AI-driven payments, programmable compliance, and enterprise-grade infrastructure. That shift is significant because it shows the conversation has moved from theory to implementation. Institutions rarely announce every step of their strategy publicly. They spend years testing, refining, and ensuring regulatory approval before rolling out products that can operate at global scale. By the time the public realizes what's happening, much of the groundwork has already been completed. Another major development supporting this broader narrative is the growing focus on developer tools and AI applications built directly on the XRP Ledger. Creating infrastructure isn't only about attracting banks, it's also about enabling developers to build products that businesses will actually use. Imagine an AI assistant running a company that automatically pays cloud computing providers, settles invoices, purchases digital services, and manages cash flow 24 hours a day without human intervention. That type of economy requires a payment network capable of operating with speed, predictable costs, transparency, and compliance. Developers need frameworks that allow AI agents to transact securely while remaining within strict rules established by enterprises and regulators. The introduction of specialized tools for AI-powered payment applications suggests that attention is shifting from speculation toward practical utility. In other words, the goal is no longer simply creating another cryptocurrency ecosystem, but building the infrastructure for autonomous digital commerce. At the same time, the broader regulatory environment has changed dramatically compared with only a few years ago. For much of the industry's history, uncertainty surrounding digital assets created hesitation among large institutions. Many companies preferred to wait rather than risk operating within unclear legal frameworks. Today, however, governments, regulators, financial agencies, and lawmakers around the world are actively discussing stablecoins, digital assets, tokenization, and blockchain infrastructure. The conversation is no longer whether digital finance will exist, but rather how it should be integrated into existing financial systems. This distinction is extremely important because institutions invest where they see long-term regulatory clarity. Banks, payment companies, and asset managers are responsible for managing enormous amounts of capital, and they require certainty before implementing new technology. As that clarity improves, infrastructure providers that spent years preparing for compliance may find themselves in a stronger position than those built primarily around speculation and hype. Perhaps one of the strongest indicators of where the industry is heading is the rapid growth of tokenization. Financial experts increasingly discuss a future where stocks, bonds, treasury products, investment funds, and other traditional assets exist on blockchain networks. The potential market size reaches into the trillions of dollars, making it one of the largest opportunities within digital finance. Tokenization is not simply about converting an asset into digital form. It is about improving efficiency, reducing settlement times, increasing transparency, and enabling programmable financial services. However, institutions require more than technology. They require compliance to travel with those assets. A token moving across different networks must still satisfy regulatory requirements, ownership rules, and security standards. This is why interoperability and programmable compliance have become central themes in enterprise blockchain discussions. The future may belong not to isolated systems competing against each other, but to interconnected networks capable of communicating and settling value seamlessly across the global economy. All of these developments point toward a much larger transformation that extends far beyond cryptocurrency markets. The world is gradually moving toward an economy where software interacts with software, AI manages routine financial decisions, and digital infrastructure connects institutions across borders in real time. Payments, identity verification, compliance, settlement, and liquidity management are becoming parts of one integrated technological ecosystem. While retail investors often focus on daily price fluctuations, major institutions are investing billions into the infrastructure supporting tomorrow's financial system. History has repeatedly shown that those building the roads often benefit more than those simply driving on them. That is why many analysts believe the real story is not today's market volatility, but the steady construction of a digital financial architecture that could redefine how value moves around the world. And as we'll discuss next, the institutional excitement happening behind closed doors may be one of the clearest signals yet that this transformation is accelerating faster than most people realize. As we wrap up today's discussion, take a step back and look at what is happening across the financial world. The biggest institutions are no longer asking whether blockchain has a future. They're asking how quickly they can integrate it into their existing systems. Banks, payment providers, asset managers, and technology companies are investing billions of dollars into tokenization, stablecoins, artificial intelligence, and next-generation payment infrastructure. Retail investors may still be focused on today's price action, but behind the scenes, the conversation has shifted toward building the financial rails of tomorrow. That's why developments involving enterprise adoption deserve so much attention. They're not simply announcements. They're pieces of a much larger transformation that could reshape global finance over the next decade. The same is true for artificial intelligence. AI will not operate efficiently if value still moves at yesterday's speed. Autonomous agents, smart applications, and digital businesses will require payment systems that settle instantly, operate at low cost, and follow programmable compliance rules. Whether it's paying for cloud computing, settling invoices, or executing cross-border transactions, the infrastructure must be trusted by both institutions and regulators. This is exactly why many experts believe the next wave of blockchain adoption will be driven by utility rather than speculation. The technology that solves real-world problems is the technology most likely to survive and expand. For XRP holders, the biggest opportunity may not be found in daily headlines, but in understanding where the industry is heading. History has shown that major technological revolutions often look slow until suddenly they accelerate. The internet, smartphones, and artificial intelligence all followed similar paths. First came skepticism, then experimentation, and finally widespread adoption. Digital assets could be entering that same phase today. Of course, nothing in investing is guaranteed, and everyone should conduct their own research before making financial decisions. But one thing is becoming increasingly clear. The infrastructure for the future economy is being built right now, and many of the world's largest institutions want to be part of it. If you enjoyed today's analysis, be sure to subscribe to XRP Update, turn on notifications, and share this video with fellow XRP supporters. Thank you for watching, stay informed, stay patient, and we'll see you in the next XRP Update.